This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, February 5th, 2015. Euro dollar. So the euro continues to consolidate off recent 11-year lows, with the market locked within this consolidation roughly between the 1265 area and the 1535 area above. And so the market is going to need to see a break on either end for the next directional bias. A break back below the recent consolidation low at 1265 will open the door for a retest of last Monday's 1098 11-year low, and then a break below there will expose the 110 level further down. Back above 1535 will open the door for a more significant correction in this market, potentially up towards the 118 area. But ultimately, the 50-day moving average should cap any gains, and the market remains locked within a well-defined downtrend while below that 50-day moving average. Sterling dollar. So cable has broken higher and is trading back towards key resistance at 52.70. It's going to be important to keep an eye on this level today to see if the market closes above or below 52.70. A close above 52.70 would open the door for a more significant correction in this market within a broader downtrend up towards the 54.85 area, while inability to close above 52.70 will keep the pressure on the downside and put the focus back on the recent low at 49.51, and then below there the 2013 base at 48.13. Dollar yen. So dollar yen continues with its range contraction. The market's been locked within a consolidation over the past several weeks and already now a few months, and the market is waiting to see a break given the underlying bullish trend in this market and the recent push to 7-year highs at 21.85 in December. This does suggest and favor a move to the upside above 21.85 and for a bullish continuation towards 125 next. Ultimately, only back below 15.55, the low from the 16th of December, would compromise the immediate bullish outlook. But a break below 15.55 would open the door for just a correction. It wouldn't shift the trend, but open the door for a correction, potentially down towards the 110 area. But again, the story right now is a contraction in volatility, and as the market continues to contract, is increasing risk for a breakout in dollar yen. Euro Swiss has since broken above 102.50, which has put the pressure on a move towards the 107 area. The market has been very well supported on dips since, and only back below 102.50 would compromise the newly adopted bullish outlook for this market. With Aussie, it's a story of consolidation after fresh 6-year lows in this market, down by 676.25. Key resistance now comes in at 78.52. That's the recent high from this week, and so you want to pay attention to those two levels, the 78.52 above and the 76.25 6-year low below. A break on either end will help determine whether the market is ready for a more immediate bearish continuation down towards the 75 handle and then 70 further down, or whether a break back above 78.52 will open the door for a more significant correction before the market considers a bearish resumption. Dollar CAD. So dollar CAD is in the process of correcting and pulling back a bit after recently breaking up to fresh 6-year highs at 128. The next key focus above is on the 2009 peak at 130.65, and so the market should continue towards that level over the medium term. Short term, there still is risk for a bit more of a pullback in this market. The 20-day moving average is the next key support, which comes in right around right now the 22.85 area, and so we could see setbacks there for the market to sort of look for the next higher low ahead of a bullish resumption. Kiwi dollar. Kiwi dollar is also correcting right now off of recent multi-year lows in this market as well. 4-year lows here after breaking down below 72 to trade to 71.75 ahead of this latest minor bounce. The market's now looking for the next lower top ahead of what should be a bearish resumption down towards and below the 70 figure. Any resistance now should come in well ahead of or towards the previous support at 76, where that fresh lower top is now sought out. S&P 500. The SPX 500 continues to chop around over the past several weeks, with the market showing signs of wanting to put in some form of a major top. The market will need to stay below, ideally, the 2070 area to keep this toppish structure and outlook intact, while a break below 1968 would be required, the low from the 16th of December, to confirm and open the door for an acceleration of declines down towards the October base at 1820. Gold continues to consolidate above the recent high that was broken at 1256. The market is expected to continue to trade above this level and consolidate around the 1250 area on dips following the break of this level a few weeks back. Ultimately, the structure has now shifted towards a bias to the upside, with the market seen retesting the 1345 peak from back in July of 2014. Really only a break back below 1217 area would compromise the current newly adopted bullish outlook in the gold market. That's all for today.